Hi there, traders. This is Brad Gilbert with the Market Insight for the 31st of May. Now, we had a pretty interesting session yesterday, and we've seen the US dollar, which was sort of topping out around just under 95. The figure just dropping down here, just under 94. It's come back towards that good support line. You can see it's sort of getting a bit of traction there, but it is drifting lower. Now, there's a few things going on the back end that we need to have a look at. One of the things is just having a look at the data that came out yesterday. Okay, it was a bit of a build up, and I mentioned this in the Market Insight for the 30th of May yesterday, where we had a bunch of potential releases. They were sort of second or third tier numbers out of Germany. The German numbers were stronger. Then you come back down through the sentiment stuff out of the Eurozone. That was, if anything, a little bit stronger for me. Then we had the CPI out of Germany, which was much stronger. That really gave Euro a shot in the arm. And then also the major part of that was the news around Italian politics. They're going to look at another avenue to try and get things through. Otherwise, they will have to go to an election. That also gave an undercurrent of strong Euro sentiment. The GDP numbers, the second estimate, the prelim numbers, once again, the second estimate itself was a little bit weaker than expected, but the PCE prices prelim was a little bit weaker as well. So we had weak US dollar, weak US numbers, and we had strong European numbers, and that really led to that dollar index getting a little bit of a push to the downside. Okay, now I don't think the US dollar trend is over by any stretch, but it was enough to give the market a bit of breathing space and a bit of a relief rally. Now you'll see this a little bit more prominent on the majors. So if I just come back over to the majors here, now just having a look across the board here, where we saw the Aussie and Kiwi have completely disconnected from, the last few days, if not a week, from the Euro and Sterling. I know we have seen a bit of a rally here. You can see the stronger German numbers, weaker US numbers, a bit of a geopolitical shift towards a bit of a neutral stance from Italy. And we are seeing Euro back towards that really good resistance level up around 117.10. Sterling starting to trade sideways through the trend line. Now that's going to get a little bit tricky as we go forward. The Bank of Canada, we had the rate decision, no change in rates, but they were very hawkish about future rate prospects. They did take out some cautious sentences out of their statement. That was enough for the market to really jump in and sell dollar CAD hard. Also, oil rallied $2 as well, so that also helped the cause. Now, the sleeping giant, to me, is still dollar yen. Now, we've seen a fair bit of action going across the board. It's now trading sideways, and we've got a great, what I would call an itchy barn strategy on the top side here. And this really comes into play with what the current upcoming data is today. It's going to be really important for what happens here. But before I get on to today's economic numbers, this is a good example of where you need to adjust your trend lines according to what's been happening. Okay, so you just need to go through your major currencies. Now the Aussie here, it's broken through that trend line on the downside. I need to get rid of that. This trend line here, I'll just leave it there for the moment because it may act as support when it goes back down. But if anything, the next sort of major level, okay, if I can just get rid of that, is up here around 76.47. It's got a fair way to move. Now, some traders will be drawing trend lines, say, from this high to here, and you can see that's already gone through. Drawing a trend line to the most recent level is just picking the high, right? To me, that's not a real resistance level. You're looking for the ones that have got more than 2 touches, and this one here, as I said, is, it's already broken through. If anything, on the downside, we've got a trend line, a support trend line sort of building. So I'm just going to that's how I leave. Like, you don't want the technicals to tell you anything else except exactly where those levels are. So as I said, this level down around 75.59.60 may act as support on the way back down. And that's where today's data will come into play. We've got a number of things that could impact the Aussie. Just looking at the same thing for the Kiwi, right? Redraw, have a reassessment of your lines. As you can see, this first one has been blown out of the water. Now, this is where the Kiwi is going to get a little bit tricky, get a little bit loose. On the downside, we've now got a good support, or the beginning of a support trend line. You can see where it's broken through that resistance trend line here around 69.52. Now it's sitting up here in the middle of nowhere. 70, the figure, that big round number, is acting as resistance at this stage, but really there's no major levels around. So you're going to be looking towards those round numbers, and this could really go anywhere. Now, overall, the trend in Kiwi's down, but if we get strong data today out of China or Australia, then we may see this thing a little bit higher, and there's no levels to really trade. So I'm going to be leaving that one alone for the moment, unless we get some weak data out of China, and we may see that lower. So that's, to me, that's a little bit on the tricky side. All right, so once again, I'll just come back to, so I'm just going to leave that chart exactly how it is, because it tells me exactly what's going on. Now, this is where dollar yen, right? I'll show you the yen crosses in a minute. It does look like it's actually forming a pretty good opportunity here on the top side. We've got the cloud and the resistance trend line coming at the same level. This is where the Japanese traders and everyone else is trading the same way, right? So that's a really good thing to be focusing on. This is going to give us an entry level for sure. I will explain the setup in a minute when I get to the economic data, but dollar yen is looking like it's really game time for dollar yen. As I mentioned before, euro, there's nothing really to do here. If you look at this trend line, it goes a long way back. We've got good trend line resistance around 117.06. Now, there's no way the Italians are going to get a resolution straight away. So I think I'm still looking to sell euros up towards 117 the figure. Now, sterling is getting a little bit tricky. Now, this trend line has been running back to sort of April 18th, around there somewhere. And you can see how it's coming in. Now the currency is just trading sideways. It gets a little bit tricky from here. Now, if you actually just draw the trend line across to the most recent level, it's really got the high and the current level. Now, that's not really resistance. Okay, so we're going to be start scratching our heads as to what is going on here. Now, you can see just on the downside here, there's no major level. So this is where the big round numbers will come into play. But you might see an opportunity. See how it's these lows here. Well, it's actually a little bit lower than I thought. I thought that'd be closer to 133. It's a bit of a pivot line, so it sort of hasn't well, it just poked its head above there. Yeah, even that's a little bit sketchy. So sterling is going to get a little bit loose as well. If anything, you can be drawing I would suggest you probably start drawing in your new support trend line, and that's going to go across the bottom here, and it will give you an idea of where support is, at least. If we get weak data, then you can be selling and also using that as a support line to get long, because sterling, I mean, it's come a long way. I don't think there's been a major change in sentiment in sterling, but we may see it rally back up towards maybe 134. It's a bit of a stretch, but we need something really strong out of the UK or something really weak out of the US, and that'll get the ball rolling there. Okay, so let's just, so the majors themselves, okay, they are set up a little bit precariously. They're not as clear and simple as they were, say, a week ago. Dollar CAD's already left the building. Aussie and Kiwi are at unusual levels. What you need to do now is really connecting with the economic numbers that are coming out. And this is where the opportunities will come from, because this will give us clear momentum. Now, industrial output numbers, prelim numbers are pretty, they're important for Japan, but really important for us because the equity markets had a real good bounce yesterday. The Nikkei is due to open up, I think, 230 points up. Now, that's your starting point. If these numbers are strong, then we will see the Nikkei rally, right? So we're looking for a number above 1.2%. These are out in 20 minutes. But don't forget, the equity market opens up 10 minutes later. So, but if stronger numbers, I think we'll see a pop to the top side in dollar yen, and that's one of our really good opportunities first up. Then you come into the rest of the Asian session. Now, we've got a bunch of numbers that will definitely impact the Aussie. We've got the capital expenditure numbers, which are very important. We've also got some manufacturing numbers out of China, right? So those manufacturing numbers out of China will also impact the Kiwi the same as the Aussie. But the Aussie numbers, okay, will definitely more impacts isolating the Aussie. So just keep an eye on that. So the Aussie dollar's going to be a little bit of a trading opportunity, but we need uniformity with those numbers. We either need weak numbers or strong numbers. The capital expenditure numbers are the most important for the Aussie today. All right, these ones here. Now, with that, as I said, with the Aussie up where it is at the moment, it's going to move around where the data takes it. So the ideal situation is, first of all, we get either a stronger number or a weaker number out of China, and the CapEx numbers goes with that Chinese data, either weaker or stronger, and that's where we'll get a clearer move on the Aussie just for the Asian session. Once again, we'll be keeping a close eye on dollar yen. If those, as I said, if those industrial output numbers out of Japan are stronger, and then we get strong Chinese numbers and strong Aussie data, Aussie yen will definitely be flying to the top side. And that's something you need to really switch on for this upcoming session. Now, as we come back down through the rest of the trading sessions, you've got the like the European session now, especially the way Euro's bounced, is going to be a lot more lively. Okay, so we've got some GDP numbers out of Switzerland. We've got some house pricing here out of the UK. Some more GDP numbers out of Spain. Their CPI data yesterday was stronger. And then there's a whole raft of important or potentially important Eurozone numbers as well. All right, so just keep an eye on this. And as I said, sterling is sitting very precarious. We get strong sterling numbers here. It's sitting very precariously. We may get a significant rally to the top side. So that's where the numbers, the fundamental numbers match in with what's going on the currencies. Euro's still got a lot of structure and a good resistance trend line to work with. At this stage, I'm looking to sell against that, but this may change with the numbers. Sterling has got room to move. So if we start to get really strong, say, housing numbers out of the UK, and even these mortgage approvals, these numbers aren't usually that important, but the situation makes them important because where sterling is. Then you've got the, as I said, the Eurozone numbers. Euro is very lively at the moment, even though that geopolitical situation is driving things. The numbers will come into play. And then as we come back down, so don't forget, we're getting closer to the non-farm payrolls, but we do have another good round of US data to come out beforehand, and also some Canadian numbers. Now, the CAD, clear bias to the downside. Ideally, you're looking for strong GDP numbers out of Canada. That should push dollar CAD further down. But the US numbers, okay, these consumption numbers, I mean, you can have a look at those weekly initial jobless numbers as well. But just keep an eye on it. The dollar is just in a little bit of limbo at the moment. I don't think it's really under that much pressure, but these US numbers will give us a good lead into sentiment for the non-farm payrolls coming into Friday's trading. All right, so although you come back to the charts, right, and you think to yourself, well, it doesn't look like there's a lot of opportunities here at the moment. Well, there actually is. As you can see, if you match up the data, okay, Aussie's going to be in play, Kiwi in play, dollar yen in play, euro in play, sterling, and obviously, well, dollar CAD, I think that's probably out of play at the moment. But the rest of these currencies, this is where the data has a chance to really move things. Sterling, as I said, the top side looks very open. Euro, if the sentiment really comes in really strong, chance for the top side. If it's weak, well, then we've got a good resistance line to work with as well. Aussie and Kiwi will move either way with the data. The current momentum is top side, so strong numbers are our better trade. And just keep an eye on dollar yen. Okay, if it breaks through the top of that cloud, we'll get a run to the top side, potentially up towards 109.80. All right, or if the data's weak, then we should just see it sort of drift off. Okay, and that's where we are. And that's just coming back onto that point. Just have a look across here. The Japanese equities, as I said, the Nikkei due to open up is the Nikkei futures due to open up 230 points. That's the major focus for Asia. The US equities have already given us a starting point for global equities. So you'd expect the European equity markets to rally as well. Right? A little bit of pressure off with the Italians sort of proposing some sort of alternative to getting out of the euro. All right, and the dollar, we'll see how that sort of pans out from here. I guess the only other thing to really show you is, I just come across, let me just move this across the drawing instruments. If you have a look at the yen crosses, this is where I sort of an opportunity the other day on this where the Kiwi was the only one that hadn't broken. Today, funnily enough, dollar yen is the only basic yen cross. You've got Aussie yen broken higher, Kiwi yen, euro yen, sterling yen's coming back into the cloud, and CAD yen. Now, dollar yen is the key to it. So that's why I'm looking for strong Japanese numbers or a rallying equity market to really get this thing shooting to the top side. I think that's where the focus will be. Everything else is broken higher. Suggests to me that dollar yen will go with it. All right, guys, that's pretty much it. You know, by the time you get into Thursday's trading, you really the majors themselves have really taken shape, and this is where you know, your patience during the week should really come into play, and we can see some really good opportunities sort of forming. I think those that have been patient will you know, can really enjoy the benefits of that patience and sitting tight, waiting for the opportunities, match up these fundamental releases with the general momentum in the currencies, and that's where the easiest trades will be. All right, guys, good luck today. I'll see you in the trade zone. Cheerio.